Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Hey, everybody. Welcome back to the Get Real Podcast. Ron Phillips and Heather Marchant here.
Good morning.
With some good news and some okay news. And, well, we're going to do another current events. And
feels like current is on the daily, so just stay current.
We're not going to do geopolitical current events. Unfortunately, I would love to do that, but I think it's going to have to be on another podcast. So many things happening in the world right now. So much incompetence in the world right now. And on that note, let's talk about reporters. Because reporters are incompetent. Not all of it. I mean, surely there's a reporter who's listening right now and they're like, I'm not incompetent. And you probably aren't. You probably are the Lone Ranger out there who is not incompetent.
Trying to make the right with the world.
U.S. foreclosure starts reach pre-pandemic levels nationwide.
Dun, dun, dun.
Headline on an article by a well, I mean, that's not an untrue statement. It just sounds really, really bad, and it sounds worse than it is. So let's go through this and try to actually talk about what it really means. Okay. This is from, most of the information on this is from Adam Data, which is just a huge company that gathers data on home sales and at a whole bunch of different data points on home sales. So they say in here that there were a total of 34,501 U.S. properties with foreclosure filings. And that's up 14% from a month ago. So, we did a show on this, I don't know how many months ago, but basically the same thing, right? The numbers are up. They're going up. Well, it makes sense that they're going up because, I mean, people can get foreclosed on now. And, pre-pandemic, people were getting foreclosed on. So now we're back to, I mean, what they said, what's the headline? U.S. foreclosure starts reach pre-pandemic levels. And what were pre-pandemic levels, Heather? They were normal.
They were relatively normal is what I was going to say.
They were pretty normal. Guess what? I know this is going to come as a shock to reporters out there, but people have gotten foreclosed on pretty much forever. I think since Moses was a baby, I bet people way back in the day lost houses to the bankers back then, or the money changers, as they were called back then. I'm pretty sure it happened. I don't think this is a new phenomenon. And just because you can write that something's up 14% with no context is not good. Now, to their credit, as you read down through here, I mean, Heather, it starts to actually unwind. And it talks about the states that had the most starts. But I think that the biggest aha moment in this whole article is that it says right here. No, that's not it.
Well,
here
I think it's interesting. Oh, go ahead.
No, go ahead. I found it. So we're good.
I think it's interesting that returning to normal means things are plummeting, right? Like,
right.
And it's really a great way to sell the news. But it's I've seen that locally here where I live, the prices are dropping, but in a lot of ways, it's just going back to where they should have been before people just overinflated prices due to lack of supply. So this whole, foreclosures are, back up again is interesting because it's definitely normalizing, which is exciting. I am so happy to be back in a normal market. Oh, it's great.
Yeah, me too. I was just talking to a friend who's, potentially moving to Charleston, and they were like, yeah, man, the market and whatever. I said, man, just start putting lowball offers in. Just start houses aren't moving like they were. People are freaking out about it, probably because they read the news and they don't realize what a normal market is. You can get great deals right now because people just are uneducated, or they're misinformed because of articles like this that they don't read. Right.
Yeah.
This is the pull quote from the whole article, right? The entire article. There's all kinds of numbers. They go over the markets that have the most starts, all this stuff, which is all great. I mean, it's fun to read. This is the pull quote. Quote, repossessions are likely to continue running below pre-pandemic levels for several reasons. Most importantly, that over 90,
so almost all
90% of borrowers in foreclosure have positive equity in their homes and would benefit from selling these properties at a profit rather than risk losing everything to a foreclosure auction or lender repossession. So, end quote. So after they say, now this paragraph is literally directly after this one, which says lenders repossessed 3,938 U.S. properties through completed foreclosures, or REOs, in August of 2022. Up 28% from last month and up 59% from last year. And then right after that, repossessions are likely to continue running below pre-pandemic levels. I don't even understand how those could be in the same article. Now, they are.
I mean, what a good position to be in. Like if you can't pay your mortgage and you're looking at foreclosure, but you have equity in your house. And 90% of people that are getting foreclosed on have equity.
I mean, I just can't with these people sometimes. I really just can't. So REOs are up. Not a shocker. We told you guys this before. Okay. Starts are up. They're really not what they should do. If there's any ounce of honesty and integrity in the media at all, what they would do after they saw all these stats they would say, man, guys, things are pretty much right back to normal where we were before. And it's actually really better than it was before, because before the pandemic, people didn't have as much equity. And so they were getting foreclosed on.
Yep.
But now 90% of the people have. This is good. This is a good news article.
I agree.
And the headline
makes you think, oh man, we're in trouble. And as well, Ron, we also had a lot of government funding during COVID that prevented a lot of people from going into foreclosure, right? There was
100%.
all sorts of funding, and now those funds are mostly dried up. And so it would make very logical sense that you'd have people that would say, well, lost my job, 2 years ago, never went and looked for another one. Now I can't pay my mortgage. Like, it caught up with people.
Haven't paid it for 2 years.
Yeah.
All of a sudden I'm going to get foreclosed on. Oh, look at this.
Shocked.
Look at this gift that the market gave me. So I haven't had a job. I haven't paid my mortgage. No one has forced me to. And my house went up $100,000. I think I'll just cash that out and not work a little bit longer.
Yep. 100%. And I think that it's just very misleading. And I remember talking about this so long ago, Ron, when all that funding and all those programs came out, going, this is such a disservice to people to not really understand the ramifications of their choices. That, I mean, that's got to be a good portion of the foreclosures that are happening now, because we've seen it with evictions. People that are, oh, whoops, guess I should have paid my rent, and now I'm so far in the hole I can't. Now you have an eviction and you got to move out. So, anyway.
Next, let's talk about that. This might be a quick show. We got two pieces of really pretty good news. So that's solid good news.
Solid
in the housing front, right?
Mm-hmm.
I mean, Nothing has collapsed yet to the point where these people are going to get foreclosed on. They're 90% of them can go out and sell their properties, and probably make some bucks so that they can either go rent somewhere, which would be great for us, or go buy something less expensive or whatever, start over again. I don't know. Without a foreclosure, that makes it really, really difficult to do either one of those two things.
Such a market gift for those people.
Okay, so I told you, Heather, about my friends who were having a debate online about interest rates going north of 8% before the end of the year.
Yeah.
It must suck to be a politician in power right now, because on the one hand, if you complain about the interest rates rising, then you go, well, if you try to force anything that way, where you try to force them down because we're up on midterms, well, then all you're going to do is exacerbate the inflation, and that's bad too. Okay, so people are pissed off about inflation. People are pissed off because the mortgage rates are rising, but kind of have to have one to help the other one, all caused by a bunch of morons in the government on both sides. But man, I would hate to be the party in power when everything's going to hell in a handbasket right before an election. Let's talk about mortgage rates on that intro. Heather, let's talk about mortgage rates.
Mortgage rates have been up this week. So we've been
up and away.
Yeah.
And I don't think that's going to change in the near future.
Yeah. Unfortunately, I don't either.
I think the general consensus from most of my friends is that we're probably going to see 8% interest rates. And let me put this in perspective. The last time we saw 8% interest rates was when I bought my first house. 8.25%. And folks, really? I am, yeah. Huh. I mean, that's like 2 decades ago.
How long ago is that? Okay.
That's a long time ago, people. Might be longer than that. I don't know, but somewhere around there, give or take 5 years, a couple of decades ago. No, it would be give. It's either 20 years or more. It's not less. Okay. So that's the last time we saw 8% rates. That's a long time ago, people. Yeah. Most folks don't even know what that means. Never had one that high.
Yeah, because I wasn't in the buying place 20 years ago. So I don't even remember. I remember rates around the 7s, 6.5. I don't remember 8. So
8.25 was my first rate, and my parents thought I had stolen the loan. They just thought I literally hit the jackpot.
That's amazing. Yeah.
And it was, because prior to that, they were, way higher. Anyway, we're probably headed there, but in this conversation, there were all of these different schools of thought. Now, I have been trying really hard. I've been listening to people in the mortgage business try to describe and explain what is happening. Some of them are completely befuddled, and I got to be honest. I thought I kind of had an indication or understanding of how this works. Completely blown away. So the Fed raising the rate doesn't necessarily mean that the mortgage rates are going up, because the mortgage rates are tied to the Treasury. But now I hear all these people that are saying that when interest rates go up and everything starts to get crazy, everybody's going to go back and buy these Treasuries. And if you go back and buy the Treasuries, then rates are supposed to come down. Anyway, I'm not smart enough to be explaining all of that stuff to you. Someone listening to this is going to be, Ron, this is so easy. And they'll probably comment or send us an email, Heather, and go, this is so easy, guys. It's just like this. Okay.
Agreed.
Okay. But
I'm in the same boat.
Well, let me just,
I know that much, but that's it.
Heather, let's just say something that's easy to understand. This is easy to understand. Fannie Mae forecasts sees 30-year rates averaging 4.5% for all of next year.
And that's an
Now,
average.
yeah, I don't know how that happens, but that's what Fannie is forecasting, and Freddie Mac is also they're also saying the same thing. The rates are going to be lower, but not before we see 8.
Yeah.
Or north of 8. So let's talk about the silver lining here, because there is a silver lining here. This is also really good. If this happens, this is fantastic news.
Yep.
Because everybody who's been buying can just refinance next year.
Yeah, I
No
mean,
big deal.
It's exciting because right now less and less people are buying because of rates and they're a little nervous, right? And so now could be potentially a great time to buy to get better deals. And we've been talking, gosh, for the last couple of weeks, Ron, builders just hurting right now because so many people were canceling their contract on the property they were building to move into themselves, and rates went up and they said, whoa, we'll have to stay where we're at. Like, we can't afford the monthly payment anymore. Or maybe they don't qualify at the new interest rate with the payment. So anyhow, builders are offering massive price reductions and incentives. And for us, we prefer the incentives because they make way more sense for the cash flow. So we're getting better and better deals all the time, which is excellent.
Yeah, this should be great news moving into what is typically a crazy busy season for us. Last quarter, everybody is trying to buy. So, I mean, you think about this. Everybody's trying to buy real estate and Range Rovers and trucks because they're trying to get rid of their taxes. Last quarter, everybody's doing that. So this year, last quarter, everybody's going to be like, wait, what the heck is happening? Because, the cash flows are not as good as they were. Well, they probably are going to be next year. As a matter of fact, I just had a discussion with another one of my friends. He's like, hey, are your buyers doing adjustable rate mortgages? And I said, no, not really. I mean, I'm sure some of them are, but most of them are getting fixed. He goes, why? They're like a point cheaper. And I said, well, rates are supposed to go down next year. If you're on an adjustable rate mortgage or if you're on a fixed rate mortgage, you can refinance. There's no prepayment penalties. So you can just refinance. It's not hard. And for 1%, I'm not sure it's worth the risk of having an adjustable rate mortgage, because if Fannie Mae decides to change her mind next year, then the adjustable rate folks are stuck with an adjustable rate mortgage, and the fixed rate folks are still fixed.
Yep.
And either one of them can refinance. So, until the spread becomes so large that it makes a ton of sense to do an adjustable rate mortgage, well, it doesn't make a whole lot of sense to not do one, right?
Gotta be worth it.
When so you can still close fourth quarter this year on properties, take the tax benefits, move into next year with a property that cash flows, albeit not as well as it will at 4.5, with a pretty good indication that interest rates are going to come down next year based on Fannie Mae's forecast.
Yeah.
So pretty good news, really. I didn't think that was going to happen. I got to be honest. I thought interest rates were going to stay high, and for quite a while. But the Fed rate may actually stay high, and the mortgage rates may come down, which I don't think I've ever seen that. So this is very bizarre to me, but I've never seen that before. But it looks like that's what the predictions are.
Yeah.
So
crazy. And honestly, I talked to our lender yesterday, and he was heading to a conference for lenders, and he said, yeah, it's going to be, I'm sure, just a battle of words with what do we think is going to happen, right? And trying to project. But he said Well, they went up 2 days in a row pretty steep. And he said things stabilized yesterday. There was some unemployment that was reported, that, some massive layoffs of a few major companies. And he said, so I expect tomorrow we could have a little bit of a reduction in rate. So it is literally on the daily that
Crazy.
it is fluctuating so much
Crazy.
right now and has been for a while. So great news.
Again,
I'm super excited.
2 weeks in a row, we'll talk about professionals, but another reason why you have to have somebody who
Yeah.
knows what the heck they're doing, so that you know what's happening with the mortgage market. You just have to have somebody who knows what they're doing. So anyway, I see both of these articles, while they, there's bad news in both, I guess. I see good news in both of these, and I see opportunity in both of these. And there may be even more opportunity that I'm not quite seeing yet, but those seem like no-brainers.
Exactly.
So I encourage everybody to keep that in mind as you're heading into the end of the year, especially you high income earners, so you can get your tax write-offs. I'm closing this week on a property, and I'm going to close next month on another property. And you know what? The interest rates are higher than I would like them to be. I'll admit it right now. But I guess what's going to happen next year if the rates drop?
Yeah.
Ron's going to refinance.
You better believe it.
Yeah, buddy.
It's going to be
also, shameless plug, we do have a syndication opportunity coming up. So if any of you have been interested in that, reach out to us. And it is kind of a small raise, so it'll go pretty quick. So if you're interested,
awesome.
Reach out.
That's right.
Any other news coming up, Heather?
Man, so many properties that we're vetting every day. So lots of good properties coming. So if you're looking to get in the game and make something happen, as we say here, then reach out to us. And if you don't have a point of contact here, reach out at invest@rpcinvest.com and we'll connect you with someone.
Absolutely. Till next week, everybody, get out there, make something happen.
Thanks, guys.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.